Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today, and hopefully you guys had a very nice weekend because we haven't seen each other in a few days. So in today's market action, the S&P and the QQQs pulling back ever so slightly, but since the last time we've seen each other, there's been a lot of action in the markets, both to the upside and to the downside. Many names, especially some of our favorite growth names, getting put through the washing machine. Big up days and big down days as well. Today was definitely a big down day for a lot of the AI plays, and some of that had to do with this piece of news right here. Oracle stock dipping on a report that the company is seeing thin cloud margins from their NVIDIA chips, 14% gross margins to be exact, which is under the expectation. The rest of Oracle's business is doing about 70% gross margins. So to see their Neo cloud business coming a bit underwhelming just goes to show it's not that easy and not that fast to scale these operations. And as a result, you had many of the cloud providers down, but not only them. Several of these semiconductor infrastructure plays like LRCX, plays like AMAT, plays like ASML, and other things of that nature that have ran a tremendous amount in the past few couple of weeks, now currently embarking on a bit of a pullback. So in today's video, we're going to cover a bunch of things together, guys. Got a lot of catching up to do. Number one, we'll be going through the technicals of the overall markets, talking about the SPY, the Qs, and all of your minor sectors as well. Where is the market rotating into? Where is the market rotating out of? And can we possibly derive some trade ideas from all of those things? Number two, we will be covering our big tech list rundown as well, going through these big tech names overall, seeing where can we find some possible opportunities once again, and which other plays have just ran a little bit too much and maybe we should kind of hold back on. And then lastly, towards the end of the video, we'll be going through everybody's favorite section, which of course is the biggest gainers and losers of the day. Got a lot of stuff to talk about there, a lot of action in the most recent last 2-3 days of trading. We'll talk about those to the downside, talk about the ones that just continue printing up on the highs, and see if we can derive some trade ideas from this entire list as well. And at the very end of the video, of course, I'll be taking you guys through a bit of a portfolio update since we haven't seen each other in a bit. I'll show you guys which trades I currently have open, which ones I've recently closed, and which positions I'm keeping into the rest of the week of trading. So it should be a very fun video, guys. And that being said, unfortunately, it is going to be the only video of the week. Yesterday, wasn't able to film. Unfortunately, I got a bit of a flu, and it really held me back a lot. But today we're feeling better. Sadly, tomorrow, though, I'll be traveling, and it's going to be the start of the leg home pretty much. Tomorrow, traveling from Bali to Singapore, then Singapore to Taiwan, and then back home. So the next 2 days are going to be filled with flights. And unfortunately, since most of these videos I film in the morning, Asia time, all of my flights are pretty much in the morning. So I won't see you guys, but I will be able to answer your questions on the YouTube comment sections if you want. And then next week, we'll be back home. So all these videos will return to normal timing, 5, 6, 7 p.m. Eastern uploads. So that being said, thank you guys very much for understanding my travel schedule. Thank you for your patience. Thank you for participating on the channel so far. And hopefully you guys have enjoyed the content thus far. That being said, let's jump right into the action, shall we? The S&P down about 0.37. The Qs down about 0.53 today. And if we take a look at the heat map, it was a very mixed market, right? A lot of the big tech names here coming down, except for Amazon. Amazon holding it up ever so slightly. Palantir not too bad. The semiconductor plays, AVGO, AMD performing well. Of course, we'll talk about that massive AMD deal, which saw the stock rally upwards of 30% yesterday before pulling back. Thereafter, financials. Not the best day for financials, but some of the credit card players doing better than the banks. The banks, I'll remind you, were a focus of our analysis last week for some pullbacks, and there were some trade opportunities. We'll talk about those when we go through the XLF ETF in a few minutes here when we do the sector rundown. Healthcare continues to be a very strong sector. Today, not too many gains, but still holding some very decent levels. Consumer defensives starting to come back, I say, because this sector has been really out of favor for the past few weeks. And then the bottom half of the market also very mixed, right? We know that the bonds and yields have been very mixed since that first interest rate cut. And the reason was very simple, of course, right? Because the market was pricing in different amounts of interest rate cuts in 2026 than the Fed had actually penciled in during their summary of economic projections, which is why you're currently seeing a lot of interest rate sensitive stocks pull down. They priced in too many rate cuts leading into that meeting a few weeks ago, and now they are just unpricing those 1 or 2 additional rate cuts that unfortunately the Fed is not willing potentially to give them into 2026. So that being said, that is everything everything for your sector rundown. In terms of your one-day relative performance, you can see that it was a bias to the downside, of course. Defensives, utilities, and energy making it out of the day alive, but to the downside, we had more than one, many, and most sectors. Cyclicals and technology leading the way to the downside on the 1 week relative performance. It's not all that bad. The markets are still sitting very close to all-time highs. Healthcare actually still your best performer, led only second position right here. Utilities, 3%, not too bad. Technology as well. To the downside, communication services, which is largely Google and Meta. Meta's been having quite a bit of a tumble. It is a very decent opportunity. We'll talk about that later in the video too. Real estate, as we've been saying, right, the infamous pullback in the interest rate sensitives. I do believe real estate is a decent bid here as well. We'll talk about that, of course, in today's video too. And on the 1 month relative performance, how do we stand at all-time highs? Is the market broad? Is it not? Indeed, it is very broad. The only two sectors currently lagging behind, real estate and consumer defensives, all, or rather both of them, decent opportunities in the near-term future. Before we get into the technical analysis of the SPY, we just want to run through our breadth indicators, just make sure that the markets are sitting on okay footing. Maybe not so much in terms of the shortest term indicator, which is the percentage of stocks above their 20-day EMA. You can see there's been a very large pullback here since the end of the month of August. The market's been getting a little bit more concentrated in the short term. Concentrated into what, you might ask? Well, you probably guessed it, right? I don't even have to tell you. All of the AI specific names. If it has not been AI related in the last month, arguably it has not been working. Other than, I assume, healthcare, which has been working really well in the past, let's say, week and a half. Most of the action has been really focused on AI and AI names only. That being said, percentage of stocks above their 20-day EMA, only 45%. So, with the market sitting at all-time highs right now, in the event that our Qs and semiconductors take a break, does the market have many other sectors in which it can rotate money into? The answer is yes. This indicator can push to the upside. In terms of percentage of stocks above their 50-day EMA, that is sitting a bit healthier right now at about 53.5%, which is not a very bad read, but not as high as we were having earlier in the month of September, nor as high as we had in the month of July. So you can see the breadth has pulled down a bit. We're kind of moving towards the more concentrated plays in AI. Most of the big gains have been had in semiconductors and the neo cloud providers and other things of that nature. Not so much in software names, and also not so much in cybersecurity names as well, which is a component of the AI trade. On 2% of stocks above their 200-day EMA. This as well is kind of curling over right now. So in the event that this breadth kind of curls over and we lose your market bulls, which are semiconductors right now and several of the AI-centric names, that is when you might see the ever so elusive at this point, weekly market consolidation. It's been a very nice run so far in terms of control. Very obvious who's in control now still, right? It is the bulls in terms of the daily time frame. You might be getting a little bit tired here at the all-time high. Rejection from overbought conditions, rejection from your 670 psychological level 2. In the event we come down, well, the line in the sand is still down here, 654. So you're working with a lot of space right now. No need to speculate whether or not this is the top and whether or not we're going to weekly consolidation. Just watch the price action. If you lose this 12 EMA, and you also lose the daily price action, which would be lower lows, lower highs, and lower lows into a daily downtrend, then you are getting, as I said, the ever so elusive weekly consolidation phase of the market, something that we have not had in many, many weeks at this point, 5 or 6 weeks to be specific. And in the event that that does happen, where are we going? Probably heading right back down here, 651 at about 645, right in line with the weekly 12 EMA. The bulls are working with tons of space on the weekly time frames, so just pay attention and look out for it. You're currently still in weekly overbought conditions on the SPY. If you lose your market bulls, guys, talking about the SMH, we're going to focus a lot about the SMH today. If you lose the market bulls, then that usually is synonymous with weekly consolidation. Every single time we've had weekly consolidation phases in this market, it has always started with an SMH weakening first, right? When your lead bulls turn into your lead bears and they have so much weight behind them, usually that is synonymous with weekly consolidation. But notice I say weekly consolidation and not massive sell-off and not massive corrections, because the bulls still control all the higher time frames, and so far the economic data is not so bad. Now, of course, we're missing one very crucial piece of the economic data puzzle, which is the non-farm payrolls. And of course, the non-farm payrolls is not available because the government is still once again shut down. Now, we can also develop a thesis surrounding how long the government will be possibly shut down. Many analysts are saying possibly another week or two at the most, but we can also derive some statistical performance of what happens during said government shutdowns. As you can see right here, let me just move my big head to the side. The average for the market shutdown is an average of 8 days, which we're kind of creeping on right now. And the average market performance in the week after the government actually resumes work is about 0.6%. Though during the shutdown, though, it can go either way, guys. Sometimes are very bullish, sometimes are very bearish. Obviously, right now, it's a very bullish period of time, but you would tend to argue that the longer that it stays, right, the longer that the government stays shut down, the greater the potential for some volatility, the greater potential for some drawdowns as the uncertainty starts to kind of mount and you kind of can't really ignore it anymore, right? So we're not going to speculate too much about that, but just keep all that in mind front and center when the government does open again. We will get the infamous non-farm payrolls, and depending on the results of those non-farm payrolls, that'll probably be a very big market catalyst, right? In terms of this week, we don't really have much. On Thursday, we are going to get to hear from Jerome Powell himself and a whole host of other Fed members. That is probably going to be your biggest market-moving event for the week. But other than that, we don't have any other macro releases. And mind you, even if we did, a lot of them may just be delayed or canceled because of that infamous government shutdown. So keep all of that in mind. Moving on to the QQQs right now, the analysis is largely the same. The bulls still control all of the time frames and have a lot of space, right? Beautiful daily uptrend underway right now. Any move lower, just looking for a daily higher low. Let the bears tell you when they want to go for it. Meaning, can we stop trying to short the absolute top? It's fine to hedge, of course, in this market environment because valuations, not on everything, but on certain specific aspects of the market are starting to run a little bit hot. And you can tell it by some of the charts going absolutely vertical right now. However, I would not say that the entire market is overvalued. That would be an overstatement, in my humble opinion. Certain segments of the market are somewhat overvalued. Certain aspects of the market have run way too hot in such a short amount of time, but the entire market is definitely not. And you can tell that when we go through the sector rotation, right? That's why we spend so much time talking about this rotation. That being said, if the Qs choose to pull back, just watch. If they lose this 12 EMA, the yellow line right there, in combination while setting a daily downtrend, then you know that weekly consolidation is underway. You see this happen all the time. We talk about it all the time on individual companies. It's the same for indexes. If we pull back, where could we possibly be going? Well, this prior resistance area would be a pretty good first location, and that's in line with the 12 EMA. And once again, those levels are right down here, about 582, down about 575. In the event that we start pulling back into a few weeks of consolidation, that would be a natural and very logical location for the bulls to kind of establish a more well-rounded base. Moving on to financials right now, the sector that has not really been doing anything for the past month and a half. This is what I mean when I say look for rotations, look for sectors that can afford to get some of that money. If the money rotates out of some things like, some of the high-flying technology stocks, the data center stocks, the semiconductor stocks, et cetera, et cetera, et cetera, are there other locations that have not been trading super hot for the money to flow into? One of those sectors is indeed financials. Has been beautifully consolidating here for the better part of the last 5, 6, 7 weeks. Nice little bull flag formation above the area of support, which is largely 53, down about 52.85. So keep that in mind. You can see some sector expansion with financials right now. And the banks have been doing a beautiful job here of pulling back, right? Look at these beautiful breakout retests by some of the banks, right? JP Morgan going for it, Wells Fargo going for it. Wells Fargo was in the top 5 options plays, by the way. Very nice breakout, coming back, retesting an area of support. Bank of America not quite getting there yet, but you can clearly see what type of pattern we're trying to develop right here, right? Just casual breakout retests on either the weekly and or the monthly timeframes for a bit of consolidation. And other players in the financial niche were representing good opportunities this entire time. You remember we were talking a lot about Visa down here, building some positions. That position has now been moving nicely to the upside. So this one is still very decent. And even something like a MasterCard, when it was coming down here into the low 560s, 570 area, we were saying like, yeah, it was a pretty good location, right? Just playing off of these monthly 12 EMA levels, consolidation here at the tops, getting nice and tight, not obviously extended. If MasterCard was just vertical like this, well, I wouldn't be saying it would be a nice opportunity up here, right? But sideways consolidation with improving fundamentals, with an upward bias, very decent time to be building some positions. So depending where you were looking across financials, there were some decent opportunities. And arguably, there still are some very decent opportunities. SPGI down here right into the confines of support. 680 down about 461. Decent opportunity. We've talked about it many times over the last few weeks. Moody's Corporation, same concept, right? Very decent consolidation into an area of support and now lifting above that. But if we pull back down to about 470, decent location for a very strong company. So there are some opportunities on financials. And there might be a few more over the next coming days, next coming weeks, if you're just watching the rotation within the financial sector. Because we talk a lot about rotation between the sectors, but we don't often talk, well, I do, but not many people talk about the rotation within certain sectors as well, which is intra-sector rotation. Moving on to healthcare right now. So healthcare moving beautifully right into the resistance range, 148.5, down about 145, right? Clear area of resistance on the chart right here. That being said, gorgeous move of expansion. If the bulls are a little bit tired up here, which I really wouldn't blame them, overbought conditions right now, if we choose to set a bit of a downswing in motion, you'd just be looking for a higher low, right? Moving anything above, 134, looking for a new higher low, possibly for a second attempt, right? That's possibly situation number one. If they want to just send it from here, we wouldn't complain about it, obviously, but either one of those moves would be valid because the bulls are in full control right now, not only of the daily, but even the weekly timeframes too. Gorgeous leg of weekly expansion right now. So any extended consolidation, even for 2-3 weeks, would just be looking for a weekly higher low. Tons of EMA support down there, tons of horizontal support down here as well. So even if we give back a lot of this move, guys, the bulls will still be in control, just building some accumulation, building a bit more momentum to try and attack this resistance range again. That is if they don't just do it right away, right? The other possible, trade on healthcare would be the breakout retest trade for possibly more entries, right? So you guys know me, I've had positions on healthcare from the lows. This is indeed take profit area number one. Take profit area number two would be back to the all-time high. So keep that in mind. If you have been swing trading XLV with me at the lows, just set your profit targets in motion and let the market do the rest. But healthcare looking not too bad. Moving on to semiconductors right now. So we're going to spend some time on this, not a tremendous amount of time, but just to kind of paint a picture, right? Daily overbought conditions. You can clearly see we're tracing down after today's news. We peaked out here at about 83 on the RSI, which is usually how high semiconductors get in the expansion phase of a nice weekly leg of expansion, right? Daily uptrend is clear as day, but pay attention, guys. It's all about that 12 EMA, right? You notice that when they lost a 12 EMA here, it got very choppy as we went into sideways weekly consolidation for the SMH for a period of time as the market waited for the 12 EMA to catch up. And then we kind of just tested it a few more times, tested a prior resistance level, which was these guys down there. And then we kind of went for the next leg of expansion. Well, now look how far we are off the 12 EMA again. So keeping that in mind, if you take a look at the daily 12 EMA first, higher lows are here, 313. If you pull back too much and you lose the 12 EMA, something they've been riding for a better part of the last, 3-4 weeks at this point in time? If you pull back too much, 70%, 80% retracement, you lose a 12 EMA, you will open up the door for a daily downtrend. And at the same time, you will be opening up the door for healthy weekly consolidation. But what will we be looking to establish? You will only be looking to establish a new weekly higher low. The market always moves in legs or in waves, so keep that in mind. Not always just straight moonshots to the upside. We can possibly play these waves. A logical location of pullback should be, in this case, the 12 EMA again. That would be about 307, 308. Now, it doesn't necessarily mean that we have to get there in an absolute straight line. As we saw back here, the markets can just slightly move down, slight downward bias, right? Consolidation range, and the 12 EMA can catch up for a few weeks. So that being said, just pay attention because the bulls did not set any support on the way up right here. You could argue that maybe this is support, but I would say that that's very small. Definitely not the same thing as back here, right? So keep that in mind. We are looking for possible pullbacks on semiconductors. Many names have ran very, very hot and are ripe for pullbacks right now. Look at LRCX, right? Never usually gets in the high 80s on the RSI on the daily. Never usually gets in the high 80s on the RSI on the weekly. I mean, I'll pull this one back for 5-6 years and you'll see on the RSI, how many times do you guys see it pull into 83 on the weekly, right? Not that much with a vertical weekly chart. This one can afford some pullbacks, right? AMAT hasn't rallied as much, but we still see a more, aggressive move than it's usually used to. Talking about stocks like ASML, which are not in the S&P 500, but just to paint a picture of, what can possibly happen. A lot of these have ran tremendously in the last few weeks, so to see them consolidate would not be the strangest thing. Micron as well, right? So am I buying call options on every single one day of red? No. At this point in time, guys, these stocks have ran an absolute ton. I am a fan of playing momentum, but there's a way to play momentum, right? When you're noticing these time frame shifts, when you're noticing that maybe it might be time for the bulls to take a bit of a breather, and they're going to use, whenever we see articles like this, guys, they're going to use these to start those consolidation periods on these stocks. So please keep that in mind. There's a lot of companies that can consolidate right now. I mean, we're going to look at TSM later, but even TSM, right? Almost a vertical move for the past 6 weeks. Overbought conditions on the weekly time frame, overbought conditions on the daily time frame, just not areas that I'm very keen on positioning on these stocks. There was a time and a place to position on these companies, and we talked about those time and places about 6 weeks ago. You guys should now be all sitting at very nice profit levels and possibly have already wound down some or most of your positions leading into these overbought conditions, right? But now would not be the very best location to start new trades, but possibly after some consolidation, we might be able to find some new opportunities in the semiconductor landscape. It's been a beautiful rally so far, but always pay attention, guys. When your lead bulls give bearish indications, I'm not saying they've done it yet, few things left, right? But I will not see you guys until next week. So pay attention. Heavy retracement sizes can lead into daily downtrends, can possibly lead us into very healthy, keyword healthy, weekly consolidation periods for the market. So please pay attention to those setups. They might be coming sooner than you would anticipate. Moving on to the Russell right now, the Russell down about 1.07%. And the Russell also, right, tried to get a nice breakout going here, but unfortunately getting stopped out at about the 248 level. That being said, the bulls, they still have it. The clearest time frame right now is the weekly time frame, in my opinion. Still, right? So this one, a bit of an interest rate sensitive sector. And we know that it's been a challenging trade the last few weeks. In the event we pull back on the Russell with maybe the rest of the markets, where could you possibly be targeting? Well, this area of support I like very much, 232 down to 225. If we can see a weekly retracement down into this level or close, it would be a very decent area to possibly build some longer duration swing trades, talking about the next 6, 9, 12 months type of thing, as you wait for more interest rate cuts, as you wait for the expansion of all of these small cap growth components, right? Because we know that the Russell is not just a whole bunch of unprofitable tech companies. No, there's industrials in there, there's healthcare names in there, there's financial names in there. They all have to get lifted simultaneously. And right now, that's not what's happening. Only a few components are participating. If you want it to get more broad, that's when you're going to see the biggest legs of a Russell rally. So far, nothing there yet, but I will be waiting patiently for that pullback if it happens. Moving on to consumer defensives right now, take a look at good old XLP, right? Coming back down into the tariff lows and arguably some of the support levels that we have not seen since May of 2024 as well. This is a huge level, guys. Big prior resistance from 2022, 2023, support level from last year all the way through this year as well. Decent location, in my opinion, to be building some swing trades on XLP. I know it's not the sexiest trade. I know it's not the fastest trade, but if you're looking for rotation and the thesis is possible short-term tech, short-term growth consolidation, well, where's the money possibly going to flow into? If it flows into a more risk-off nature sector or a more defensive sector, XLP might be one of the first areas that money could possibly be seeking to rotate into. So can we see a swing trade opportunity from here all the way back up to more recent highs in the low 80s? Sure. As I said, I know it's not the sexiest trade, but at least it's a very, solid trade in terms of just logic, in terms of levels, and in terms of just respecting some of the criteria that we look for, right? Coming into support, they were very low conditions on the RSI as well. The bulls are playing good defense in this level, so not the worst trade opportunity in my opinion if we're looking for some trades that are, have characteristics that could be in line with our good old sector rotation. Moving on to utilities right now. So utilities up about 0.46%. This one's been absolutely crushing it recently, and it has to do, of course, with the energy boom that we're currently seeing right now because of all the energy demands for the data centers. We were commenting on this trade during this back test back here last month. We were saying this might be one of the better trades to be scouting, right? If you weren't a big fan of chasing AI names to the upside, maybe you wanted to play the energy that powers all of these AI names. It was a beautiful technical breakout retest. This is like textbook right now. Great expansion level right now. The take profit level that we established back here has now been reached, $90 psychological. So hopefully you guys are sitting on some nice profits. For those of you that played utilities, the ones that I've been kind of looking at, which I kind of hinted at recently, were VST. We've been talking about it a lot in the last few weeks. VST still building a nice base of support down here. Could be a very interesting play to kind of carry into the next few quarters as they kind of build out their own infrastructure. I mean, they already have natural gas, nuclear, solar, battery storage, and all things of that nature. And the valuation is not so bad as opposed to other companies in this space. And even Next Era Energy. You remember we were talking about Next Era Energy in the last few weeks down here at the very casual support levels that we established, right? 70, I was saying, watch out for this one. The valuation down there was not too bad. And we're just looking for some possible expansion. Well, now we got the expansion leg in the last few couple weeks. So congratulations to all of you if you were able to kind of get some of those positions off on NEE. I still believe there can be more for this stock as it hasn't really done much in the last, let's say, about 2-3 years of trading, right? But what it has been doing is improving its infrastructure and improving its power output as well, right? So that being said, this is also one of the biggest companies that can provide the power that a lot of these companies are looking for directly. Talking about real estate right now, real estate still down and out, but that being said, still in an accumulation range. Some of my favorite plays still remain some of the mortgage companies and some of the home builders, right, for real estate, unless you want to play this one as an ETF like XLRE, which encompasses your REITs, encompasses some home builders, encompasses some mortgage companies, and everything under the sun in terms of real estate. That could be a logical play, just basing your trades off of the support level and going for the expansion thesis over the next 6, 9, 12 months type of thing. Or you can get a bit more niche with it and possibly go for the home builder players, right? You know, we have XHB, we have ITB. We'll talk about those. We identified these plays a long time ago, and now might just be the second chance for entry, right? So what happened on these charts, longer term time frames, beautiful monthly retracement size right now. The bulls have created a ton of space off the lows. They're just looking for new higher lows for possible further trades of expansion. So as we pull back into these $100 psychological levels on either XHB or ITB, this could be the next reload area. We've been talking about this. When they were peaking here, I was saying, the first leg of the trade is now established, right? For any positions that were built down here. Now you might want to wait for the pullback. Now the pullback is here. So establishing the second leg of a trade could be a nice location in those lower $100 regions, or even stocks if you guys want to play specific companies like Rocket Mortgage. You might remember we made an absolute killing on Rocket Mortgage, trading it from here all the way up and selling it around the $20 range. It's now back. So you might see me load up on this stock again. Back now, this support level, 15.5 down to about 14.5. Very decent location. It's come down a lot. Obviously, there was the, investigation surrounding the Redfin practices in the past few weeks. There's just been an unwind of interest rate sensitive stocks. It's now gone from overbought, oversold conditions. All things that lead me to believe that, yeah, it could be a very decent reload area. I'm not saying that it's going to bottom out exactly right here and just shoot to the absolute sky. It may be a more slow process of kind of bottoming out and whatnot, but building some further positions in a good company like Rocket Mortgage that we can carry over the next few quarters. Decent, very decent in my humble opinion. And that is your sector rundown. Hopefully you guys enjoyed that. Speaking about the VIX has been kind of all over the place, but holding higher levels than not, right? I mean, we're still relatively low on the VIX, right? But we're not 15 anymore. It's kind of been looking for excuses to kind of pop its head up, right? So we're now sitting at about 17.5. If you move any higher, it's going to be fantastic for some short put opportunities. And I'm pretty sure the last few weeks, you guys have noticed some better volatility on the options chains if you guys were looking to sell put options on some of your favorite companies. And we welcome that, right? Also, while the VIX was low and still is low, it's a good location to be looking for some left behind plays for some stocks that you might be willing to do some share replacement trades on using leap call options, 1 year calls, 1.5 year calls, 2-year call options on some of your favorite companies that maybe have just been left behind in this market rally. While the volatility is low, decent time to pick those up. However, if the volatility starts peaking, that's when we really have to focus on selling options. I'm not talking about selling your longs. I'm just talking about the wheel strategy, right? Selling puts under the markets, selling covered calls on maybe some names that have ran an absolute ton, selling covered calls still further out of the money. When the VIX spikes, it's a great time to benefit from some of that volatility premium and sell some options into the market. So we'll keep an eye on this one. We'll see how it goes. In terms of the yields right now, the yields just basically doing a whole lot of nothing, right? We kind of bottomed out right before the rate cut announcement, and we've been doing a whole lot of nothing ever since. Pay attention to this, 4.2, guys. 4.2 down to 4.1 on the 10-year is going to be the level to watch because it is a weekly downtrend, and they currently are using this area as resistance. We're looking for follow-through to the downside. We'll see if we can get it. On the 20-year yields, exact same concept, but this time the level is about 4.75. You're looking for follow-through to the downside here on yields, which should bring bonds higher, but bonds have been a very difficult trade, right? We kind of peaked here right before the interest rate decision and shortly after, and then it's just been kind of sideways consolidation as the $90 level proves to be a little bit difficult to mount over and above. So the same analysis stays true. We still are on the right path. The trend is now our friend, but it might just be a lot slower than some people are anticipating, of course, but still a very decent trade to be in, especially for a either market hedge or just a play on the macro direction of interest rates. Now we got to talk about gold, of course. Gold cracking above $4,000 per ounce. Absolutely nuts. Crazy move on gold right now, and gold, in my humble opinion, is still somewhat absolutely untouchable. It's fine if you've been in positions, but as I've said over the last few weeks, it is very difficult, guys, to start positions up here when you're this overbought on all time frames, right? It's just not a good trading habit to get into. When you're currently sitting right now at about an 88 on the quarterly RSI, after a move like this is one of gold's biggest moves, right, in history, in the history of the asset. This is one of the absolute biggest moves that you've ever seen, right? In terms of the monthly timeframes, are we overbought on the monthly? Gold is now in a 91 RSI. They have not hit 91 RSI on the monthly, guys, since 1979, 1980. That's how long it's actually been that we've been this overbought, right? Taking a look at the weekly time frame. Weekly time frame, 82 on the RSI. Daily time frame as well, 86 on the RSI, right? Absolutely ridiculous moves by gold. However, I've been talking to you guys about, how we could have played this, right? The entry points for gold longs were back here. Now, to maintain the gold longs, if you are a longer duration swing trader, right? Well, you would have a few criteria. As the stock moves higher, you would be establishing your stop losses above your daily higher lows. As they set new ones, this is what's referred to as trailing stop losses, right? Other people like to go with the loss of the daily uptrend. When they see something like this, they'll be out and they'll say, well, that was the top of the move. We might just be going into weekly consolidation. But if you ask me, can I buy gold up here, guys? I think the answer is clear, right? You can if you want to. At the end of the day, it is your money. And as I keep saying on these momentum trades, whether it's gold, whether it's stocks like Iris Energy, whether it's some of the data center plays, whether it's some of the semiconductor plays, you can buy them when they're already extended and you can possibly make money, right? But is it a very good trading habit to develop? Probably not, right? Because you're playing a game of musical chairs, right? Everything's overbought. It's an overcrowded trade, and you're just crossing your fingers that you know that you're in late, but possibly you're not in late enough. Possibly there's just a bit more in the rally, right? That's not a very good way of trading, is it, right? You not only, is it just not good psychologically to get in those habits, but also, in my experience, it's very difficult to put a lot of size behind those trades, right? It's very easy to put a lot of size during an accumulation phase, or rather during a declining phase of an asset, right? Because you build the position bigger and bigger and bigger because you deem it to be undervalued or oversold. It's very difficult to put in a lot of size. And if anything, when people usually get in after big rallies, you start to get a bit nervous and you obviously want to take your profits sooner than later, right? So it's just not my favorite style of trade. That being said, congratulations to everybody holding gold right now. Very strong push. The bulls are in absolute full control of every single time frame. You don't need me to say that. But when you want to see when they're going to lose that control, well, pay attention, guys. It all starts on the daily time frames, right? Just wait for the bulls to show you when they'll be done. And that will only happen with a loss of a 12 EMA and a daily downtrend. The exact same thing that happened right here. Loss of the 12 EMA and a daily downtrend. You saw that they were pretty much done, right? They didn't crash, but they did go into an extended period of daily and weekly and monthly consolidation. So pay attention to those patterns, right? And that being said, moving on to crypto right now. So since last time we saw each other, Bitcoin cracked 125K. Very nice. Now the bulls may be getting a little bit tired, but good thing we have a nice fallback area, right? Beautiful daily leg higher. And now we're looking for some daily higher lows. So at this point, anything above 109, 108, just looking for a new daily higher low for possible further trend continuation. And good thing for us, we have a very solid level down here. 119.5 down about 116.8. This is the fallback location and can be used for some possible swing trade longs if that is your type of style. Or even if we're looking to sell puts, if we pull down into this level, selling puts a bit below that, counting on our bulls to play defense down here for a pop is not the worst opportunity either. But Bitcoin looking pretty good. That's a nice daily leg of expansion, and additionally, it is a beautiful weekly leg of expansion too. Even if we consolidate, tons of space for the bulls, looking for a little bit more on the weekly time frames too. And on the monthly time frames, it's always been the same thing. It was just looking for a monthly higher low, which we have now since found into perfect support, which was 107 down to 101. Talked about it for the longest time down there. That's the last time I was accumulating some Bitcoin positions. And now looking to move a little bit higher, right? Beautiful monthly breakout. We will see how they close the month, but looking good for now. Moving on to Ethereum. Ethereum down a little bit on the day, but pushed significantly higher since the last time we spoke. Very nice, clipping into high 47s earlier, right? So nice daily leg of expansion right here, and now looking for a little bit of a pullback. So very natural price action from Ethereum. Overall, though, have we really done anything? Not much, right? So what we do have right now, though, is the bulls saying, listen, we want to try to go for it. Create some space, build the higher lows, and maybe go for the swing trade longs. Not too bad right there. In terms of the weekly time frame, it's a bit less clear, but we had a weekly downtrend, perfectly backtesting support, 4,000 at 3,700. We talked about this area a lot. I know a lot of you guys are able to find positions off of that, so congratulations. Now, engulfing move, and you're looking for the good old two-step procedure, in my opinion, of, right, the weekly uptrend reset back to the bulls. It might take a bit longer than you might be anticipating, but even if it doesn't happen, right, or even if they go all the way deep down here, back 41, 4,000, not a bad location to be accumulating possibly some ETH swing trade longs again. So we'll see what happens with Ethereum, but so far, so good, not looking too bad at all. And that is everything for a more extended market rundown, because I haven't seen you guys. I missed you guys, man. So I figured I should spend a bit more time on that one. Now, let's dive into some of our big tech names, shall we? So moving into our good old faithful big tech list, starting off with Apple. Well, Apple hasn't changed much since the last time we spoke, guys. It's still exactly at the same spot that it was, basically in overbought conditions at the top end of a price range right now, really peaking out at the prior all-time high. So on Apple, not a big fan of building some swing trades here, even though it does look like a very nice bull flag for some future expansion. If you did want to go with this one, it'd have to be a very tight stop loss, right? 250. If you lose 250, guys, the daily uptrend or the daily breakout is pretty much invalidated, right? And then you would just be going into a bit of very healthy weekly consolidation. So Apple working with a ton of space here on the time frames, especially on the weekly, looking very good here. Weekly, beautiful upswing. If you pull back a bit lower here, back down maybe to the 240s, could be a nice opportunity to sell some puts into the below support area, which once again is 236 down to 225. No further long-term portfolio buys for me on Apple. Those would have had to be done down here when the valuation made a bit more sense. As of right now, it's trading a little bit rich, somewhat overbought conditions, and at the top end of the move. So not my biggest, not my number one trade, of course, but a decent one on any pullbacks. If I do see them, I will call them out, obviously, as we always do. Moving on to AMD right now. AMD. So this one up 4% today, but of course, I didn't see you guys yesterday when the stock was up, well, at one point, over 35%, especially in the pre-market, right? Pulling back a little bit, but, trading a bit of their equity, 10% of their equity, for a big deal with OpenAI, 6 gigawatts, which is roughly to somewhere between $20 and $30 billion. Not too bad of a deal for AMD, right? And this was always the thesis that we had with AMD. You might remember me kind of talking about AMD so much. I mean, this position right here, I kind of, I can't really give financial advice on the channel, right? But I don't think I was talking so highly about AMD as a trading opportunity. Here, I don't think there was another time other than this time right there, where I was saying, guys, you know, you might want to look at AMD. The chart's looking pretty good in terms of the setup, right? It was a monthly cup and handle. It was looking pretty good. So of course, I don't have a crystal ball. I didn't know that the OpenAI deal was coming. But what we did see very clearly was a very nice accumulation pattern, both on the weekly and both on the monthly timeframes. Beautiful engulfing move. Backtest of support down there, 150. We were playing the heck out of short put options down here, but we were also saying that I was accumulating some leap call positions and some shares for the long term, looking for the next leg of expansion. That leg of expansion has now come. We didn't know it was going to come from the OpenAI deal. It could have just been normal price action of something that, you know, while the whole rest of the semiconductor industry was running, AMD was kind of lagging behind, and it was just a question of time before this one would play a bit of catch up as well. So very decent deal. There's been people that have been saying, well, this is a whole bunch of circular funding, isn't it? Well, yes and no, but keep in mind, also some people likening it to the dot-com bubble, of course, but there is one key differentiating factor between now and the dot-com bubble, right? And it all has to do with who is funding this, right? Who is funding this infrastructure build-out? Is it a bunch of vaporware companies with no earnings or close to no earnings trading at, you know, 200-300 times forward price to earnings like they were back then? Keep in mind, guys, during the height of the dot-com bubble, I don't think you guys understand, right? The QQQs were the NASDAQ was trading at a forward 60 to 70 price to earnings multiple. The S&P was well into the 40s. So keep that in mind. Like, we're not at dot-com bubbles, but who is funding all of this, right? It's companies with huge cash flows. Like, these companies are not borrowing money. Well, unless you're talking about Oracle, but that's a different story, right? These companies, talking about Amazon, talking about Google, Meta, Microsoft, right? Even NVIDIA itself, these companies are flush with cash, absolutely flush with cash. They're just investing their retained earnings, their retained cash flows, right? It's not as if they're borrowing substantial amounts of money to actually build out this infrastructure, right? So yes, their money's going to NVIDIA. NVIDIA's using that money to fund different projects, like their deal that they have with OpenAI, which is a bit of a circular deal. Some of that money is making its way to Oracle. Some of that money is making its way back to OpenAI, which is then being repurposed for AMD chips. Anyways, it's a whole gigantic ecosystem. Is it a Ponzi? Debatable. No, because it is actually backed by real world cash flows. Does OpenAI currently have the cash flows to really, you know, support all of this funding? Not yet, but they're working well towards 1 billion users, right? 1 billion monthly active users, which is absolutely massive. And it just takes a while to scale these operations. So bubble territory, I think it's not black or white. I think you can't necessarily say yes or no. I think it's a bit of gray, right? But if I had to give a, you know, on a scale of 1 to 10 of bubble territory, I'd kind of put it at like a 3 or a 4, and I'll explain why. When we look at all these companies, right, especially some of your big tech legacy players, what are they trading at? I mean, we'll go through the list, right? But a lot of these companies are trading like on a forward basis for 2026 earnings, high 20s price to earnings multiples or low 30s. There is not much of a bubble going on there. Now, certain companies here and there, especially some of the smaller cap or mid cap stocks, you know, in the, let's call it $5 to $30 billion range, some of the infrastructure build out plays, some of the data center plays, some of the other smaller semiconductor plays, sure, yes, I will agree with you. But large cap legacy tech, definitely not in bubble territory right now. And taking a look at AMD's actual valuation after a big move like this, a lot of people look at trailing price to earnings, right? And you'll see this number right here, TTM, trailing 12 months price to earnings, 117. You might think that's expensive. That's the past, guys. What people are missing from the whole part of the story is AMD, as we've been saying, this has been our thesis from the stock from the time it was $80, $90, right, where we bought it. What is currently happening with AMD's EPS expansion? Well, it's going from $4 to $8. It's a double in the next 2 years, right? What is happening with their revenues? They're going from $33 billion to $53 billion and then $67 billion in 2028. So is the company making a whole lot of money? Yes. Are they expanding really well? Absolutely as well, right? Revenue growth 17% per year, EPS growth 30% per year. And if we want to redo the math right there at these same numbers, however, this time using a 210 valuation, I'll do it for you guys right away, just to derive whether or not the stock is expensive. And this is for 2025 ending EPS. I'll give you the PE ratio. It doesn't matter. I can use 2026, but the PEG ratio, which is the average of the growth rates for the next 3 years, that is going to normalize everything. So you might be able to say, yeah, but if you use 2026, you'll get a lower PE. I know that. It's encompassed in the PEG ratio, right? But just let me do the calculation for 2025. If it makes sense for 2025, it's going to make sense for 2026, right? So 210 divided by 387, you're currently looking at a forward price to earnings ratio of 54.26. As I said, if you use next year's, it's going to be even lower. If you divide this number by their EPS growth rate, which is an average of the next few years, you're at a 1.8 peg. Is that crazy? No. Is it a 3, 4, 5 peg like some other stocks trade at? Absolutely not. So is AMD overvalued right now? Not in the slightest, right? It is still relatively okay valued, not as good as it was when we were talking about it back here at 150, 140, 160, which is why it was such a decent buy down there. But still, it's not looking too bad at all right now, even at 210. Now, that being said, is it a good time to start a position up here at 210? Well, if you have been watching the channel, if you've been watching AMD this entire time, and you find that now is finally the time to start a position, guys, you have to reevaluate how you choose to buy companies, right? You can't be waiting this long for confirmation, right? It's just a little bit too late, in my opinion. That being said, am I bullish for AMD? Do I think the stock can hit $250, $300 over the next 12 to 18 months? Absolutely, I completely do, and that's why I'm still holding on to all of my AMD positions. However, is starting an AMD position up here the best possible risk to reward? The answer is no. Is it bad? No. But is it leaning more towards bad than good? Yes, right? So can we still nibble up here? Sure, but is it as good as down here or down here or down here? Well, obviously the answer is absolutely not, right? So do with that what you will. It is still technically a nibble up here, and in the event that we retrace a good portion of the move and come back to support 186 and about 180, well, that would be the next area in which we might be able to build some more swing trade positions out of a nice support area, out of some nice consolidation ranges. So that is everything I had for you guys for AMD. Hopefully you enjoyed that analysis. And yes, I am holding my, swing trades to the upside. In the Discord, we had members making a tremendous amount of money, both on plays that were, open back here, secondary batch of plays that were open right here. And I was calling this out, guys. I was saying, listen, if you have multiple contracts, especially call options, that you are up over 100% on, the easiest thing to do is close half of them. If you're up over 2x on something, you can close half of the position, especially if you have a whole lot of time left on your call options. You close half. That means your entire trade now is free. You're playing with house money. Then it's much easier to hold the balance. You trust me, guys, try it. It is much easier to hold on to a trade that you've now made free as opposed to holding the entire bag, right? I'm not going to say that it's not more profitable to hold on to the entire bag. Obviously it is. But another way of doing it, guys, is just clipping out profits on the way up as you approach your final price targets, whether that's 250, whether that's 300, that is up to you, right? My personal one is 280 to 300 into 2027. Moving on to Amazon right now. Amazon down how can I say down, man? I love this stock too much. It's green, 0.4% to the upside. Not too bad of a day for Amazon, and currently still reacting nicely into the support range down here. Call it about 218 up to about 227. The Bulls are playing really good defense, right? So that being said, is Amazon a good opportunity? I still do believe that the answer is indeed yes. We've been consolidating in this range for a better part of the last 3 months at this point. The valuation on Amazon is not too crazy right now. If you look at forward end of year price to earnings, is currently trading at about a mid 30s, which is not too bad, and a 1.74 peg. So no crazy valuations right here for Amazon, right? All the lines of business are operating at full capacity right now. And this one was on the top 5 option list. Sunday's video. Yesterday was a phenomenal opportunity to be selling put options down here. And if Amazon continues to throw these candles down into the mid-teens, I will continue to participate into the low teens or 210 area for some short puts. The entire time that it stays here or goes down there, this entire zone, in my opinion, is a very beautiful accumulation period for some longs, whether those are leap call options with 2027 expiries on them, or whether those are shares. Still a great location to be building some positions in Amazon as you're just looking for some monthly higher lows, beautiful consolidation before maybe another beautiful leg of expansion on this stock. Moving on Google right now. Google, still consolidation mode, right? They had a good day yesterday, 2.05 to the upside, giving a lot of that back today. But Google has just been stuck in kind of this daily downturn, right? Nice engulfing move. Can the bulls right, turn this into a new daily uptrend, that is something that we will see. If they cannot and continue the slide, well, once again, I'll remind you what we're in right now. It's just weekly consolidation, right? Google with the absolute monster move off the bottom, and now just consolidation from overbought weekly conditions. Where can we possibly consolidate into in my opinion, kind of worst case scenario, back into the 12 EMA, right? 227 might be the location the bulls are looking to play into. That being said, that would just be weekly consolidation and maybe a bit of very healthy monthly consolidation as well. That being said, around 225, which is where that 12 EMA is, the stock down there is not even that expensive at all, guys. Low 20s multiple and a 1.56 peg. Those numbers are still great. So if it does consolidate, you might even still see me buy some more shares of Google down here. Because even though the stock has ran a ton, right, it all comes down to the fundamental valuation. Is it cheap or is it expensive in relation to its growth? And it still is relatively cheap, especially at those lower levels. But what we want to find on these companies, guys, we don't just want to buy them anywhere, right? What I'm a big fan of, what I kind of try to show on the channel, is lining up factors of confluence. When the fundamentals and the technicals align at the same time, you know that you're probably getting some of the best possible entries. Meaning, if we can line up relatively cheap valuations with good consolidation periods, then it's really good. Here we have kind of a paradox, right? The stock has ran tremendously a lot. However, the valuation is still cheap. So it's still a fundamental good entry if you just forget the chart, but the chart is not the best technical entry. Maybe if it gives us a bit more consolidation, well, maybe then the stars will align and we'll have our confluence, right? We'll have a good technical entry, but also still a good fundamental entry. And I prefer those entries more than when you only have one out of the two. But that's just how I personally trade. You guys are free to do what you want, obviously. Moving on to Meta right now. Meta, talking about Meta, this is probably one of the best, well, probably one of the best technical entries in the market right now. Maybe not in terms of valuation, because the valuation of Meta down here at the lower 700s is, I mean, it's not terrible, but it's not the best, right? If you guys want me to redo it, we did it up there at about, let's just do it at 710, right? We did it at 760. If we just do a forward multiple on Meta for the end of the year, earnings per share, right? 710 divided by your good old 2578. Currently sitting at about 27.5. It's not that bad, right? 2026 would put this at a mid 25, 24 even. And if you take a look at the PEG ratio from there as well, they're growing EPS at about 13 per year, which is a bit of a light estimate by me. The street has this a bit higher, but I like to be a bit more conservative, because if the numbers work when you're conservative, they'll work in a more bullish environment too, right? So that being said, if we divide this by 13, it's currently sitting at about a 2.12 peg, which is not terrible, right? It's not that bad. Not that expensive for Meta right now. So also, though, a decent technical entry. What do we have right now? Well, number one, if you take a look at the daily time frames, Meta is approaching somewhat daily oversold conditions, which is something that it has not approached in a long time, right? Since the tariffs, this hasn't been this low on the RSI. What do we also have? Beautiful daily support. We've given back the entire earnings move, filled the gap, and into support. 705 down to 682. Decent area. I was saying that when Meta would come down here, I would be building some positions. And that's exactly what I'm doing right now. We've been very patient for it. Now it's finally here, and now it's time to take action, right? Weekly downtrend. Weekly downtrend means you are just in a monthly consolidation period for the stock. And who controls the monthly timeframes, guys? I think it should be fairly obvious who controls the monthly timeframes, right? So as we continue on our monthly consolidation, in around 700 or slightly under, I will be building some swing trade longs on this fantastic company that has very good growth prospects for the next 6, 12, 18, 24 months. That being said, I'll show you guys some of the positions. Well, for now, I'll be fully honest, I've only been building shares, but I also have been exploring the possibility of maybe some leap call debit spreads or just pure leap call contracts. In the event that I fire off those trades, well, I will let you guys know, of course, on the channel. Moving on to good old Microsoft now. So good old Microsoft, down about 0.87%. Hasn't changed too much since the last time we spoke. However, it did do something substantial in terms of price action, right? Daily uptrend is now confirmed by the bulls, breaking out nicely out of the top end of this range, 518, in which it was stuck for the past 3 weeks. Nice, very nice. Looking for maybe the back test and possibly run on Microsoft. A very decent technical setup right now. That being said, on the weekly timeframes as well, it's not looking terrible, right? Weekly uptrend recaptured by the bulls as well, bouncing nicely off of this weekly 12 EMA, which, by the way, was the fallback location. When we were all the way up here, I was saying, wait for the pullbacks of the 12 EMA and see how the bulls react. They reacted perfectly. Now that you have your new daily uptrend established, we can possibly take some longer duration swing trades on Microsoft with a back test down here of about 518. You can set a stop loss below 504, be about $14 worth of risk, and you're going for something like this, back to the all-time highs, right? It is a swing trade idea, possibly best executed with maybe some call debit spreads or some things of that nature. Not looking all that bad. In terms of the fundamental valuation of Microsoft, though, this is one stock that, when I have to draw the line somewhere, I draw the line at very high historical standard valuations. And although Microsoft is not crazy, not as crazy as some other stocks, it is fairly up there, right? Talking about close to a 44 price to earnings ratio, talking about a high PEG ratio as well. 2.66 is on the higher end of things. It's kind of trading up there with Apple. So this one, not my favorite opportunity, but not all tech has to be my favorite opportunities, right? Apple and Microsoft, arguably, maybe some of my least favorite opportunities for the valuation alone. For the valuation alone and the technical setups, I kind of prefer Amazon. I used to prefer AMD, but they've rallied since. I kind of prefer Amazon and Meta right now as kind of my two favorite go-to plays for building positions, but Microsoft not in a bad location. Moving on to Netflix right now. Netflix 1191, reacting nicely from our lower area of support down here, which we were calling out. 1150 down about 1110. We were talking about down here would be a decent position to build some more shares, which is exactly what I did in some of my portfolios in the last few weeks. Not looking too bad right there. And the bulls, I mean, they're trying to go for it, right? But let's be honest, who's in control here? The short-term timeframes, the daily bears, the daily downtrend, right? Rejecting from resistance right now. We will see if we get shot right back down into there, or if the bulls can just reclaim this area as if nothing ever happened and go back into a daily uptrend. That being said, sideways action on the weekly for the most part, right? You can argue that it's a weekly downtrend, and I would agree. On the monthly timeframes, just sideways consolidation and possibly just looking for a bit more monthly extended consolidation. My favorite area for buying Netflix is still in like the lower 1100s, down about $1,000. If we keep going down into those levels, I'll keep accumulating some shares. We've been waiting patiently for these pullbacks. They're finally here from this area up there. People were asking me, can I buy Netflix still at 1300? I was saying, nah, I'm a bigger fan of 11 down to 1,000. People are saying, well, it's not going to happen. It's just going to keep running. Well, here we are, right? But down here, lower $1,000 range, decent buying opportunity for longer term growth prospects of Netflix. Moving on to good old NVIDIA right now. And you know what's funny? From all the stocks that have rallied an absolute ton, right? Who has made this whole thing possible? This whole quote unquote AI bubble that we're currently living under, right? Who has arguably been the biggest contributor, right, to this being possible? These data centers being possible, it's NVIDIA, right? Well, I mean, if you go up the pipeline, I guess you could say TSM, right? But at the end of the day, NVIDIA is kind of the one ring that rules them all, in other words, right? It's the common denominator across all of these different narratives, right? But you know what's funny? Every single other play has arguably rallied more than NVIDIA recently. I just find that very funny. Now, maybe that's because NVIDIA already had its time to shine in the past 2 years where it was doing everything and the whole rest of everything was doing nothing. But I just find it funny, right, that so many plays are running ridiculously in the past 2-3 weeks, and NVIDIA is just kind of slowly grinding up higher here, gaining levels, but good price action though, right? Now, that being said, NVIDIA is one of these stocks that is not that extended and providing possibly a decent setup for some possible swing trade longs. We were talking about this, right? Very decent setup. Breakout, retest, and possibly looking for the run on NVIDIA, looking quite good here at about 185. Not that overbought on the daily nor weekly timeframes. On the weekly timeframe, sure, you can notice a little bit here of bearish divergence, which is basically lower highs on the RSI, higher highs on the price. If that does happen and NVIDIA chooses to pull back a little bit, you just be looking for something very healthy, like a weekly higher low, possibly coming down into the 12 EMA down here, 175. One thing's for sure, if for some reason we do not complete this breakout pattern and NVIDIA just gets dragged down in the mix and comes back down here, I'll be doing the same thing that I was doing when it was down here. Basically playing some short put options down there and maybe looking to build a bit more of a share or swing trade position if we come down into those lower locations. I'm a bit hesitant to start NVIDIA swing trade longs up here just because if we go into index consolidation on the SPY and the Qs, NVIDIA is not just going to magically do this while the SPY and QQQs are consolidating, right? So that's why I'm a bit hesitant with things in a bit of overbought conditions right now on the indexes. and some of your AI names running really hot, NVIDIA might just get dragged down in the mix. And as a result, if I do choose to play NVIDIA, I might be a bit more patient down there. But the valuation of NVIDIA is not so bad, right? We did it at 175 with this year's ending EPS and also with the average of EPS growth for the next few years. It's trading at like a 1.7 peg. It's really not that bad, right? Moving on to Tesla right now. Tesla down about 4.45%, not able to complete the breakout towards 500, but still not looking the worst, right? Pay attention to this guy right down here, 417. If you flush 417, sadly, that's the end of your daily uptrend, and that would be your new daily downtrend and the top of the weekly move, but you would just be looking for very healthy weekly consolidation. Not that bad of a pattern on Tesla right now. It could maybe bring you right back down here, 405 down about 384, which was the big resistance area that we were talking about. Now it should be acting as support, and the 12 EMA is kind of buried right down there as well. So Tesla's been having some phenomenal price action, but don't get too greedy up here, right? If you want to play the swings, the next area to possibly play a swing would be down there into support, not looking that bad at all. Moving on to Palantir. Good old Palantir had a bad day last Friday. We didn't cover it on the channel together. But, you know, Palantir is just doing Palantir things, recovering most of that loss right away. But what that did do is kind of give us a new line in the sand level, as the bulls did temporarily lose the daily uptrend. Now, they're trying to get it back right now, but if you cannot set any brand new highs and you lose these lows again, 170, you are going into a new daily downtrend for the stock, and a new leg of weekly consolidation for the stock as well. Has done a phenomenal job on the weekly of engulfing, right? If you're looking for a higher low, there would be no better location, in my opinion, than down here. 162 could be a nice fallback zone. You got the weekly 12 a bit above that, and that yellow line is exactly where the bulls kind of, you know, had to pierce through here and back tested as support. So that could be a likely area where the bulls fall back to if they have to gain a bit more momentum here. But keep in mind, we're getting a lot of company earnings here, guys, in the next 3 weeks, right? Palantir with earnings about this time next month, the 10th of November, tentatively. But we will be getting a lot of big tech earnings before that, and I do believe Palantir will probably move with those as well. So is Palantir a good buy up here at these levels? It's very debatable. If you have a very long time frame, very long time horizon, you can make the argument for yes. Is it a swing trade up here? Not the best risk reward, in my opinion. That was something we were talking about down there. It made a bit more sense, right? But up here, a little bit extended for my liking. Moving on to SOFI right now. SOFI, 6.75% to the upside. Very strong push by SOFI. It was a daily downtrend, which also was very healthy weekly consolidation. We were talking about this for the past couple weeks while it started this whole procedure, looking for the weekly higher lows. And we were talking about this whole fallback area, right? 24.5 down to about, 22.5. And it literally got pretty much there, right? The lows were like 24.89. So although it didn't come down perfectly into it, we were saying, during this pullback, right? Especially as we come into this level and, close to the level and into the level, decent area to both be selling puts in the market, but also maybe to be building some further swing trade longs. You start some positions on the pullbacks as they kind of occur. You kind of move into some daily oversold conditions, or not daily oversold, but short-term 4-hour and definitely hourly oversold conditions right there. And now you get the pop, right? But obviously nobody knew the pop was coming today. It could have continued a bit lower, and I would have been fine with that. I've been selling put options on this stock for the past couple of weeks, and it's been a very profitable endeavor. So hopefully it has been for you guys as well. That being said, SoFi bulls looking to capture what they have lost, did a good job cooling off the weekly RSIs, right? So can we maybe be looking for the next leg of expansion beyond 30? Maybe, but it's going to require continued index pushes to the upside. If that does not happen, SoFi might just continue on to its weekly consolidation, and that would not be the worst thing in the world because we'd just be still looking for a bit of monthly consolidation. So, with many of these stocks, guys, the timeframes look good, right? But let's not kid ourselves. If the indexes go into inevitable weekly consolidation, it's going to happen one week or another, right? You just can't move in a straight line higher. And when that weekly consolidation does happen, a lot of these tech names will be brought down. So the best thing you can do right now is derive a trading plan and levels to go shopping at. When they get hit, will you be buying and how much? Moving on to Uber right now. Uber still unable to crack above that infamous $100 psychological level, right? They kind of closed above it yesterday for the first time in history, and now back under it again. But that being said, daily price action is very choppy. The weekly price action provides a bit more clarity right here for Uber. Not looking too bad, right? Beautiful weekly uptrend. If we get a bit more downside moves, well, you'll be looking for a fallback location, 93.5 down about 90 bucks. Decent area. If I see Uber back down here into the 90s, possibly with some short-term time frame oversold conditions, quick, sharp moves to the downside, right? I might be looking to sell some put options below 90. Think like the mid 80s where the valuation is quite attractive in my opinion. Very low PEG ratio and decent price to earnings and very decent free cash flow yield as well for this company, and tremendous growth, by the way, across its various lines of business. Moving on to TSM right now, the last one of this list. TSM down 2.77%. TSM, guys, getting above $300 the last few days. Very strong move, but this is a vertical move, right? Just pure FOMO buying right now as people starting to realize how strong of a company TSM is. I mean, people always knew, right? But the big reason that people don't choose to invest in TSM is because of the geopolitical risks that you cannot take away, right? They will always have those geopolitical risks. That being said, it is one of my favorite companies in my long term, but I don't blame you guys for not investing in it if you can't go beyond those geopolitical risks. That being said, TSM looking a little bit hot right now, right? 77, 78 on the weekly RSI. Big candle to the downside today. We will see. Maybe tomorrow they just act as if nothing ever happened and just keep pushing, right? But is it the best time to chase this stock up here, guys, with everything we've talked about in today's video? No. The last time we were talking about TSM being a phenomenal averaging opportunity was here in the 240 to 220 range. We were talking about it so much, right? Short puts below this range, accumulating some more shares for the long term right here as well, because down there at that valuation, it was still very decent. Now up here at 294, it's okay, but it's not what it was, right? If I take 294 divided by, I'll just do it like this, right? 294 divided by where we did it at 230, that's an increase of 27%. If we do that on the price to earnings ratio, right? You're currently trading at a 30. Not a 23, 24 anymore. And if I take, let's say, 27.8, 1.278 times your PEG ratio as well, what are we trading at? We're trading at a 1.8 PEG, which is still objectively not terrible, but you can't necessarily say it's cheap anymore. Back then it was still cheap, categorically cheap. You could not really argue the contrary. Now, is it cheap? No, it's not very expensive, but it's also not cheap anymore, and the technicals are somewhat overbought. That's why it's not my favorite opportunity anymore. However, if we get a casual pullback here of, 5-10%, bringing us down maybe into the 12 EMA, nice move down here, possibly some short-term oversold conditions, maybe we can find some more swing trades, or if they just, send us into some form of a sideways consolidation area where we can establish more clear stop loss areas, something like they did back there, well, maybe we can trade this one again. But as of right now, it is gone, and it's just not my favorite one to play. That being said, I'm still holding every single one of my shares in my long-term portfolio. I'm not selling, but I'm not necessarily buying up here anymore. TSM is now currently moving into the kind of hold category, because as you guys know, right, it's always three things. It's not always a buy or sell. Sometimes it's just a hold because the fundamentals are still good. But that being said, it's just not something I would average into at these heightened levels. So that is everything for your overall market rundown. Hopefully you guys enjoyed that. Now we got to take a look at the biggest gainers and losers of the day. We're going to spend probably maybe 10 minutes on this one, then a couple minutes on the portfolio, and we should be done for today's video. It's going to be a longer video because, as I said, it's the only one of the week. So I figured I should give you guys a, hearty video filled with tons of little tidbits here across the sector rotation stuff, across the big tech list, across the news, right, across the AI bubble headlines. And now we're going to do the biggest gainers and losers of the day, and I'll show you what types of setups I'm actually looking for, right? Now, when I go through these charts, guys, I'm going to be very raw, right? If it's something that I don't like, I'll just say it, and I'll say it why, right? And I'll say if I did like it, I'll also explain why I do like it too. But that being said, I'll go through these a little bit quickly. We're not going to spend too much time on these. Talking about MSTR. MSTR, decent opportunity because it's been lagging behind Bitcoin a little bit. You guys know I've been accumulating some shares of MSTR down here in the 340 down about 312 range, and I will continue to do so slowly as Bitcoin moves into a bit of a pullback. That being said, MSTR is clearly lagging behind the underlying that it tries to track, right? If you take a look at Bitcoin right here, we can clearly see when the divergence really started happening. Here's the overlay of the charts. And Bitcoin has been kind of outperforming, right? That being said, MSTR usually is like a rubber band. It tends to play catch up, and when it does play catch up, it tends to play catch up a little bit violently. So I still do believe that MSTR is a decent proposition. It's not a very heavy position for me, but I am averaging into this trade as I'm going for the larger Bitcoin expansion play over the next 6, 12, 18 months. So it's not a short-term trade for me. It's a longer-term trade for me. But if you just wanted to play Bitcoin, obviously you can do that as well. Moving on to other companies on this list, talking about like SMR, things of that nature. SMR for me remains a short put play if I'm looking to play the volatility on this one. You guys know me, lower 30s is where I kind of want to play this one. You got to be careful though, because what the analysts said upon their downgrades just the other week is true. These companies have no revenue. We talk about this all the time, which is why when I do these trades on SMR, they're not with a large amount of capital, because the revenue streams are still very unclear, and how well they'll be able to scale their product is also still unclear. So SMR, not a bad proposition, but I have to get a very cheap price, and I will be playing it with some distance. Low 30s for me. If we want to talk about Oklo, this one for me, categorical no touch, guys. I can't touch this one up here. Not only can I not chase it for some longs, it's just way too extended without a clear path for revenue and profitability. It's very extended, right, on all time frames. And also, there's no very clear support level for me to be selling put options on, which is not the same thing that I was able to say down here at this level as well. In the low 60s, we're selling puts below this area. Now it's just completely overblown. So if you want to play this one, completely up to you. But this is just not my trading style. If it's your trading style, no problem at all. If you love chasing momentum, if you love day trading, perfect. That's not the type of channel that we run here. But, you know, best of luck to you if that is the type of trading style that you are currently doing. BMNR for me is indeed a short put play as well. I'm an under 50s guy. So if I can find short puts on this one, and you can find short puts on this one quite frequently under $50, especially on big pullback days. If we continue to get big pullback days on BMNR, sending us back down to the low 50s, I have been having a very fun time writing short puts in the mid to low 40s range on BMNR, and I will continue to do so. Moving on to some of the home builders. We talked about the home builders earlier in the video when we were talking about the real estate sector. Now, I'm not playing the home builders alone, meaning I'm not going to pick DR Horton, I'm not going to pick Toll Brothers, I'm not going to pick Lennar. I'd rather just go for the ETFs upon their consolidation. That being said, the entire sector looks the same, right? Beautiful breakouts, looking maybe for some back tests. So if those back tests do continue, you might find me participating in either XHB or ITB, the home builders ETFs, because I don't want to pick the one home builder that underperforms the rest. Kind of exactly how I'm playing healthcare right now. Names like LRCX, I've been very clear on these ones. You cannot, well, you can do what you want. I can't personally touch these. They're overbought on the weekly time frames. They're overbought on the daily time frames. Yes, this is big consolidation, guys, but where are we? We are in the middle of absolutely nowhere. So the better time to position was down here, and we talked about it on the channel, but now it's gone, right? So rather than chase and feeling FOMO, I'm a bigger fan of waiting for some pullbacks. It's going to take a long time for LRCX to get me interested again. But sadly, this one, guys, when I go through charts like this with my trading style, your trading style may be different, and I respect that. But my trading style, if I'm scrolling through my list and I pull up a chart that looks like this, you have no idea how fast I click on the next chart. I'm just not interested, right? So LRCX, at this point in time, if you're looking for, you know, this one for me right now would just be a hold. If I had some shares from all the way down there, this one would be either a partial take profit, especially if I had call options, definitely a partial take profit zone, or just a hold on some long-term shares for a long-term portfolio if I wanted to keep those shares for the next 5-10 years, right? But definitely very tough area to initiate some new buys. Speaking about DraftKings, well, DraftKings down here, not the worst area to be selling some put options if it's the type of company that you like. Keep in mind, DraftKings is not a bad company, right? But it also has this black cloud overhang that it never truly gets rid of, which is the fact that it constantly is either under investigation, either has lawsuits against it, or gets promised, right, that gambling is going to be authorized in certain states across the US, and then that just never happens, right? So whenever the stock tends to rally, it just gets pulled back by this like black cloud overhang of all these external headlines that constantly plagues the company. That being said, internally, the company's been doing well. It's about to flip positive EPS. It's been doing very good with revenue expansion, and profitability is currently moving in the right direction as well. The analysts have bullish price targets on this one, and at the current time, it is daily oversold conditions. The RSI is about a 14.15. If it's the style of company that you enjoy playing, then this would definitely be the location where you might want to build some positions, right? So keep that in mind on good old DraftKings. Company like NBIS, Same concept, right? This one is a categorical no touch for me. We talked about it down here. We talked about it down here. Both very decent positions to possibly be buying some shares or buying some swing trades. All the way up here, I've been very clear on this one for the past few weeks. It is very tough to chase this one. The only criteria that you could possibly allow yourself to chase a company like NBIS, or we're going to cover the other one, which is up a ton. I mean, we might as well do it right now, right? Iris Energy, right? I've been very clear the last few weeks, and I've also been very clear in saying, although they are no-touch stocks for me, I wouldn't be surprised if even if you buy it here, the price can still go higher, guys. But that's not the point, right? Of course, if you buy something after it rallies tremendously, it can always go higher. But is it a good trading habit to build? No, because a lot of these companies are currently trading at very lofty forward valuations right now. They have not recognized all the revenue that is currently in their forward pipeline. If you take a look at NBIS right here, sure, they have the $19 billion deal with Microsoft. We know that. But how long is it going to take them to build out that pipeline, right? It's going to take them the next 3 years. So what the stock price is currently doing right now is pricing in all the growth essentially for the next 3 years, right? It's currently trading at a $29 billion market cap, which, to be fair, is not that much when you look at 2027 price to sales, right? It would only be a, what, like a 7 forward price to sales for 2027, but that's 2 years away. It'd only be like a 3 forward price to sales for 2028. But you get what I'm saying right here? You're pricing in all of that growth right now, which means that if these are the forward multiples that the stock is going to have at that point, well, you're pricing in all your compound annual growth rate of returns right now. That's why I'm saying, right? They're great to play momentum, but these, in my opinion, are only buys, and listen to me very carefully here. These are only buys if you plan to hold these stocks at least for the next 3, 4, 5 years. If not, you cannot justify the compound annual growth rate of returns, guys. You just can't justify them fundamentally, right? Great for momentum. I recognize them. We covered them both after earnings, both NBIS and Iris Energy. And Iris Energy, I was saying, excuse me, after earnings, it was a great time. 25, 26 bucks, even prior to their earnings. We were covering it back here. Very decent opportunity. Up here at $61, I cannot say the same thing. Even though this company, yes, is only trading at a $17 billion market cap, they literally just posted today, or the other day, that their annual recurring revenue for 2025 or 2026 will be $500 million, right? Only $500 million. That's a 30 forward price to sales that you're paying for this company next year. Now, obviously, in my opinion, Iris Energy is the best of the neo-cloud providers, meaning they have vertical integration, right? The energy that they use, because all of this is based on the cost of energy, because you know the data center business, well, from this headline right here, right? Until you scale, right? It's tough to produce those gross operating and then net margins, unless you have very low costs of energy, which is something that Iris Energy has because it produces its own energy. So obviously this is the best vertically integrated play, and I recognize that. But I also do recognize too that it's a 93 RSI on the weekly, which it has been for a while now, and overbought conditions on the daily. But I said this back here, I said this here, right? That it was a no touch for me, and still it rallies more and more and more. So you do you. If you want to buy this one up here and you just do not care, no problem. But understand that if you do buy these things up here, you have to buy them with a longer term thesis, because what I don't want you guys to do is buy it up here, and then if it goes down here, right, you buy this one up here and saying, you know what, I'm willing to pay this price. I know it's overbought. I know it's overextended, but I really want this stock, right? Yeah, I have a little bit of FOMO, but you can justify the valuation. I'm willing to hold it to 2030. All right, if you buy it up here and then it pulls back all the way here, I hope you will be buying more, because at the end of the day, right, you just said that you had a 3 to 5 year time horizon, so this short-term price action shouldn't really bother you, right? But most people, they buy it up here with a 3 to 5 year time horizon, and when it goes down there, they say, oh crap, I bought the top, and they forget all about their longer-term thesis in the business. So don't let that be you. There is a criteria for buying it up here, and it starts with a longer-term thesis on the company. If you're playing for short-term momentum, guys, you know, I would say that you're closer to a short-term local top than not at this point in time, right? But you guys do you, right? This is just how I trade. I'm not saying it's the best way to trade. It's just my way that I enjoy doing things, right? Moving on to different things, right? So we've covered all the other things like AMAT. We covered them early in the video. You know, AMAT, ASML, very overextended, looking for some pullbacks on those. I'm not playing them right now. Micron, same concept, very overextended, and I love Micron. I was one of the only people, possibly on YouTube, saying, Micron was the best opportunity in the entire market, possibly for some upside gains in semis at that time during the tariff sell-off because it was just so darn cheap. Arguably still, after earnings, we covered their earnings a few weeks ago, and I was saying Micron is still cheap. Next take profit target is 200. Well, look at that. We literally just clipped into 200 just the other day. So still good, but still very extended right now. On the time frames, I'll be looking to play possibly some pullbacks on these stocks when they do occur. And I think that's pretty much everything. I mean, we could talk about cybersecurity as well, I guess. Sentinel-1, probably one of my favorite opportunities in cybersecurity right now. Down here at the lower end of support, talking about 17 out of 14. Beautiful area, not only because the fundamentals are quite cheap right now, but also it's like 2 years, guys. 2 years, 2.5 years of support. Sentinel-1, one of my favorite opportunities in cyber right now, but also a company like Rubrik. Rubrik, probably my other favorite company in cybersecurity right now, because it's a company where the valuation still, a lot of these other cybersecurity companies, guys, they're bigger, but the valuations are debatable, right? Whether you're getting a good deal or not. Rubrik, I still think we're getting a good deal from about the, whole 80 down about 70s location. Decent area to be building some positions on these. But, other bigger players like CrowdStrike are also pulling back right now. So CrowdStrike, it's not my favorite opportunity. It was a decent buying opportunity down here. We talked about it on the channel. Now we'll see if we actually get the pullback into some locations on CrowdStrike, on companies like, that's not Palo Alto Networks. This is Palo Alto Networks. We'll see if we can get some short-term pullbacks, but cybersecurity could be a very interesting sector to continue to build positions in, but maybe not in the biggest names because, as I said, their valuations are quite rich, to say the least. My preferred names are some of the ones that the valuations are not so high, so to speak. I think that's everything for the moves to the downside. I mean, if not, we're going to be talking about these all day. Those are pretty much the only ones, the bigger ones, that I felt that we had to cover, right? Because none of the other things have really moved that much. It's really just a whole question of the more volatile ones being some of the energy plays. I mean, we can talk about some of the ERP names, enterprise resource planning or enterprise resource software, whatever you want to call them, right? CRM, this level, 240 down about 220, decent level to be building some positions. I mean, the stock is cheap, no matter which way you cut it, right? The stock is very cheap right now. Whether you think it's going to be disrupted by AI is, the billion-dollar question at this point. But so far, it's not looking terrible for CRM. The valuation is very cheap, but unfortunately, this one's just going to have to be if you have a different thesis in the market, then you have to uphold that, right? And we've done many of those types of trades throughout the year, right? We did that with Micron. We did that with AMD. When nobody wanted to buy AMD, we were buying AMD because we derived a thesis whereby we thought the market was wrong, right? We did that on Google as well. When we were buying Google at the lows, saying the market is wrong. We don't think that their search business will be disrupted overnight by the LLMs. And we don't think that the lawsuit is going to result in a breakup of Google's stock overall. We derived a thesis whereby we thought the market was wrong. There was a long period of time where we just sat there and the stock did nothing and nothing and nothing and nothing. And then when the market realizes that maybe it's wrong, well, then you get paid, right? CRM, I think, is a similar type of trade right now. It's a good business. It's a decent business, very decent fundamentals, decent annual recurring revenue, of course, decent money in the pipeline in terms of remaining performance obligations too, but it has the black cloud overhang above it right now of, just it's software against AI right now. It's not only this company, right? We can talk about ServiceNow and so many other enterprise resource companies that have just been getting hit hard and hard and hard and hard. I mean, not only them, right? But even companies like FactSet. FactSet, which is just institutional data analytics, supposedly. So many companies get, no, I wouldn't say accused, but so many companies get lumped up in this narrative of, their business models are just going to be forever disrupted by AI, and they're just going to go basically to bankruptcy, right, overnight. And it's just, in my opinion, it's just not going to happen. So we can still find some of these plays that are quote unquote being disrupted by AI, but you're not seeing them in the numbers right now. Arguably, Adobe is kind of in a similar situation right now where the accusations of this company being disrupted by AI are everywhere. And that might be true maybe in the longer run, but for right now, have they been missing earnings? Do the numbers show that? No. So I'm a fan of playing these companies that are being accused of AI disruption or being plagued by the narrative of AI disruption, but that you're not seeing it in the numbers right now. If you find companies that are being accused of AI disruption and you're seeing it in the numbers, that's a different story, right? But for companies like Adobe and CRM, can they be worth maybe some capital for some swing trades, right? Not talking big capital, but just some, mean reversion trades, right? Just some sentiment reversal trades. Possibly. I don't mind those at all because, as I said, you are not seeing the AI disruption in the numbers just yet, and I don't think you will see it for a considerable amount of time, if at all, to say the least, right? So those are some of the names on the lows today. I mean, I'm running way over, guys, but I guess it is what it is. We'll just do it, right? We're an hour 20 in the video right now. We'll just cover some of these high-flying stocks right now to the upside, right? So AppLovin, sorry, I couldn't talk to you guys yesterday about this one, but this one was indeed a decent little pickup down here, back around 550. This one, another one, right? We were commenting, we're saying AppLovin just vertical, massive overbought conditions. We're looking for a pullback. We're looking for those weekly higher lows. And then you get, obviously, a beautiful headline, which gives you the SEC probe, right? And what have I told you guys about government headlines? SEC probes, FCC probes, whatever, FTC probes, all of them, right? Well, usually, they always result in very decent buying opportunities. So that being said, AppLovin coming back down and tagging perfectly the weekly 12 EMA. That being said, here, well, the risk reward is no longer there, unfortunately, anymore, right? That being said, at 631, the valuation is a little bit high right now. AppLovin, for me, remains a hold. It's not a buy, not a sell, remains a hold. Fantastic company, very solid profit margins, very good revenue and growth expansion, but it's all about the price that you're willing to pay. And for me, I need to get a 5 handle, like a mid 550s like it was just the other day. If we can see that maybe again, 550 down to 500, I might be interested again. But at the current time right now, sadly, a bit too little, too late. I mean, it's not terrible up here, but you're definitely not getting the best value out of this one. Iris Energy, we talked about already earlier in the analysis. Figma, I was a fan of playing Figma down here, short puts in the mid 40s. We were able to play those for a while, but now no longer. You got to make a lot of assumptions to justify the compound annual growth rates of this one. I would not be surprised if it does swing higher here with the whole AI narrative. It could be very possible, but it's just not my favorite play in the markets. SOFI, we talked about. HIMS, we'll talk about again. HIMS, talked about it many times, right, to where playing in this area, right, either for some building of some shares in the lower 50s, high 40s in the support range, right, 52 down to 48 was a decent location, just looking for some weekly higher lows, going for the possible future weekly uptrend, not too bad. Even coming down into this level with some big red days, phenomenal location to be playing some short puts well under the market. It was actually a top 5 options play this week, which you would have had an opportunity yesterday on the Monday session or last Friday if you guys were looking for it. Short puts under the support level was a decent entry opportunity. So HIMS, not so bad. Even at 57 bucks right now, you can justify the market cap expansion. It's only 13 billion right now, right? And if you give it like an 8 to 10 price to sales multiple for some expansion, as people are doing on other names like Iris Energy and NBIS, and you just go for 2027 and you just give it like a 8 to 10 multiple, right? Well, if you do an 8 price of sales on this, what is that, like 24, 25 billion type of thing? That'd be like a 2x in the next 2 years on HIMS. If you give it higher, if you get a 10 price of sales multiple at that time, well, obviously you're going to be looking at a 30 billion market cap, 33 billion to be specific. So there is some possible further upside on HIMS as long as they continue executing properly on their strategy. Moving on to Rocket Lab right now. Rocket Lab, monster move on Rocket Lab. We were saying that down here, guys, not a bad opportunity to be playing some short puts on any consolidation down here, or maybe accumulating some shares if this is the style of company that you like. Very decent consolidation range on the weekly timeframes. That's what I like to see, guys. Big push up here, consolidation, right? Tag the 12 EMA a few times on the weekly. Then you know you're getting a better deal for the chart, right? A better deal for the price as well as you're letting the company kind of grow and accumulate more positions, right? More equilibrium, and now just moving to the highs. Now, sadly, no touch for me, but if we somehow move back down here and break out retest, maybe another play as we backtest 50, but as of right now, it's gone. Talking about PayPal right now, a beautiful move off the lows on PayPal. We were talking about this one a lot in the last 2-3 months as it was a nice opportunity be farming some wheel premium. Selling put options for the last 2 months on PayPal down here was a very profitable endeavor. Valuation was relatively cheap. We covered it after earnings. Very cheap valuation down there, low 70s. Arguably, it still is a very cheap valuation. But now, for some swing trade longs, we were talking about swing trade longs down here as well. But now, where's the take profit target? Well, take profit target is here. And your stop loss is now down there. We're at equidistant ranges. So is it a good entry right now? No. Is it a good entry for a longer duration swing? If you're looking for PayPal's possible expansion of share price back to $100, then that makes sense. But that is a wider trade. That is not a level-to-level trade. You're looking for a fundamental thesis expansion trade. That would still make sense for some expansion back to the high 90s and maybe even 100 levels, which we saw earlier over the course of this year. And I think, guys, that's pretty much going to do it. If not, as I said, we're going to be here all day. I will be here next week for you guys. Oh, Mercado Libre. Mercado Libre is a buy, categorical buy. Sorry, not financial advice. It's a buy from me. I'm buying more Mercado Libre shares down here. 2100 range, very large area of support, and a very attractive valuation under 2200. We covered these after earnings, phenomenal earnings. They just went through the washing machine a little bit with that Argentina news. You know, a bit of Argentina political instability, currency instability right there. It's one component of Mercado Libre's business, but definitely not a majority of Mercado Libre's business. But they were brought down because of those news headlines, and we were saying it was a decent little buying opportunity. So took advantage of it and started DCAing some shares down there, as I do believe the growth prospects for the company are very good, right? Very good. Monthly pullbacks. See, this is what I mean by confluence, right? Not up here, but give me some nice monthly pullbacks and some nice support levels with some very good fundamental valuations. I'm a fan. I'm a fan. Call me boring, call me conservative, but that's the way that I've traded for a number of years right now, and it's served me well, right? Just not having FOMO, not doing things emotionally, waiting for my setups and my setup alone. So that being said, guys, that's everything for your biggest gainers and losers of the day section. Hopefully you guys enjoyed. Now, cover the portfolio trades very briefly. Okay, so for some of the closed trades, guys, that you will not see in the portfolio anymore, we had Reddit as a wheel trade, 175 strike. We opened this last Thursday or Friday, if I'm not mistaken. 175 strike, 95 cents. We closed it today for almost pretty much, 80% profit, looking very good right there. 15 cents on the close. And we also closed another trade that's been running for a while. You might remember this one, Oscar Health. $10 we closed this contract for. This one was acquired for about $4.85, so 110% win right there. Came into the profit target, right? Just level to level trading. We bought it all the way down here. We were saying it might be the fastest horse in the whole healthcare insurance recovery sector race, and it hit our take profit target perfectly, the top end of the resistance range. We took some profits. If it moves down there again, I might play it again and also play it on the wheel. So those are the two biggest trades that we've closed this week. Not a very active week in the wheel for me, just because there hasn't been that many opportunities, right? We've had some big red days on some stocks, but a lot of the big red days have come on stocks that are just too high for me right now. So I'm being very patient. I have a ton of buying power. The portfolio still looks something like this. So we were actually up today about $500. This is the overnight trading action, I guess, in the account. As you can see, it moved right now, but we still have all the same plays that we've been talking about. We have a ton of buying power as we don't have that many wheel plays underway. We're currently still wheeling options on Amazon, BITX, and now Rocket Mortgage, which were assigned recently. I'll remind you of our average costs on those. We got assigned Amazon at 222.5 with some covered calls and some rolls on those covered calls. Our average cost is now 215.71. Very decent. We also got assigned some BITX too. So BITX, we got assigned at 52. We're currently running covered calls at the 54 strike, which expire next week. Our average cost on those, $48.79. That's going to be a good trade when it closes in profit territory. And now recently assigned some Rocket Mortgage last Friday with a current break even after covered calls today of about $17.59. I will DCA this trade around the $14.5 range. If you want to see our closed trades from last week, they look something like this. Bunch of wins on the wheel. We got some rolls, obviously, one assignment on Rocket Mortgage 2, and a couple lottery trades. So mostly all wins. This week has been very good for us as well. A lot of expansion on our AMD contracts and other leap call option positions as well. As you can clearly see right here, Sentinel-1 leaps right now back almost to break even. Still a big fan though. Our TLT leaps are somewhat around break even, not doing too much. Visa has been a nice leap position for us, up about 15%. Our XLV trade as well is up still 60%. I'll be closing one of these contracts as we move into the top end of resistance on XLV in or around the 147, 148 level, top end of this resistance range. I'll close one of these contracts and I'll keep the other one. If you guys want to know what I'm doing with those, short options, meaning the wheel. So as you can see, Affirm is one of the only wheel trades that we have left. 68 short puts for October the 10th. That was a top 5 options play. So hopefully you guys are able to find those. Currently working well into profit. Amazon covered calls we talked about, BITX and Rocket covered calls we talked about. These resolve orders that we had, we took these like 2 weeks ago, $5 short puts, October 17th for 60 cents. We're now pretty much 80% profitable, so that's been a good trade. Sentinel-1 we opened today, 17.5. I do not mind being assigned. That's why I wrote it so close for about 20 cents. We'll see what happens with that one. It's currently underwater a bit. And the SOFI trade that we also got last Friday on the big dip for the 23 puts for about 16 cents when we got them, and now they're currently about 75-80% profitable there too. In terms of the other long options, right, just taking you guys through it, nothing's changed here. No new additions. Only the Oscar was closed today. AMD currently sitting at a nice 50% profit on that one. I'll be holding for much higher, as you guys know. 280 to 300 is the target on that one. Amazon, still just chilling in this Amazon position. But by the way, I have another Amazon call position that I don't think I told you guys about. Let me just show you guys right here. The Amazon position that I opened recently was a 205 strike. 1001, so October the 1st. This one was a 205 strike, June 2027 for about 51 bucks. So keep that in mind. I added to my Amazon leap call position, this time not with a debit spread, with a pure long call. Still in decent territory right now. CoreWeave is still just chilling up here about 37%. Even if we have a pullback, I do not mind. I have until December 2027 for max profit on that trade. The NVIDIA small bull call debit spread is still break even. We're going to be looking for expansion into 195, 200 by November. We'll see what happens. Rubric is also a leap trade option that I have open. It's currently break even still. Decent entry. I will be averaging into that one if we retest lower 70s, high 60s. Resolve is another small little play that I opened recently. The debit spreads, as I was showing you guys, it's fine to play momentum sometimes, but there's a way to play momentum, and I really like doing debit spreads. It really circumvents paying so much in terms of volatility premium. That's why I like running debit spreads. I have the May 2026 6 versus 11 bull call debit spreads. We got them for about 70 cents each. They're up about 35%. We'll see what happens with that one. Very small entry, about a $350 entry for me. Maximum profit though is like 2,500 bucks. Small risk, big reward. That's how I like positioning for these trades. And then we have a small SPGI call debit spread out of the support area right now, which is largely break even. It fluctuates day in, day out, but it's for the most part largely break even right now. You know, down about 10, 15%, whatever it is, not down too much, still around the same level. And we have this one for January, 510 versus 520. So as you can see, not much has changed in the portfolio. If anything, I've taken plays off the table and freed up some buying power, which means that if we get some dips, I have a ton of buying power for the wheel strategy, for some leaps as well, right? I'm not full on leaps. We've closed a couple positions, opened some new ones, like a new Amazon call, a Visa one, but we have another whole batch of leaps that haven't ran so much just yet. I mean, finally, AMD is running a little bit. We got a lot of buying power, a lot of dry powder on the table right now for some either, whatever they are, right? Swing trades with leaps or possibly some short puts with the wheel, things of that nature. So doing very good. That's everything I had for you guys for the whole video, for the portfolio rundown, for the market rundown, for the big tech rundown. So hopefully you guys enjoyed this longer video. As I said, it's the only video I'll be giving you guys this week. And next week, I'll be back home. So normal scheduled uploads. So figured it should be a big one. If you guys enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We'd love to have you back. We do these normally every Monday to Friday. When I get back home next week, we will be doing them every Monday to Friday. And I will be back home to take you guys through the beautiful earnings season coming up. So make sure you subscribe to the channel to get those video updates. And last but not least, if you have any questions, please feel free to leave them down below in the comment section, and I'll be more than happy to answer you. And last but not least, if you guys wanted to join a trading community of traders and investors such as yourself, where we focus on high quality, high conviction swing trades, and also the wheel strategy, leap call options, and so many different other option strategies, but also where we focus on building very high quality long-term portfolios, which you guys hear me talk about in the videos so much, but you don't see me build out my long-term portfolio. No, that I do with my Discord members for the most part. You in the Discord will get access to everything, not only all of the trades that I take on a daily and weekly basis. So all of these trades right here, the green little check marks are wins, the red little circles are losses. I like to keep my wins fairly big and my losses fairly small, and the wins obviously more frequent than the losses, of course. These are all the trades we've made in the past few months. Just going to show you guys full transparency, right? So you get access to all the swing trades. You also get access to all of my long-term portfolio updates as well. And you get access to a few more things. You get access to our private morning live streams Monday through Friday, where I stream live and I take trades live in the market for you guys and also answer your questions in real time. So if you guys want to have more time with me personally and ask me direct questions, I can then answer them in the live stream using charts, using the fundamentals, using the options chain, and give you guys more full answers than I ever would be able to in the comment section, of course. And additionally, you can ask me all your questions in our chat rooms. I'm very fast to answer all throughout the day. You also have access to our private video section where I give educational videos on things I don't talk so much about on YouTube, right? Leap call strategies, call debit spreads, put credit spreads, technical analysis, fundamental analysis, how to build trading portfolios out, how to build long-term investing portfolios out. So many different concepts in that educational section. It's a very big section that our Discord members really appreciate. Last but not least, you get access to all of my watch lists just as an added bonus. All of my watch lists, whenever you guys see, and all my charts, whenever you guys see support resistance levels on charts and earnings breakdowns such as these, or just fundamental breakdowns, you guys can just copy paste everything. It takes like 15 seconds. You can just copy paste all these watch lists. It comes with all the charts, and you basically just have exactly what I have. After that, it makes your life a little bit easier. If you guys want access to any of that, the link to the Discord is down below in the video description. So hopefully I get to see a few more of you guys in there soon. And if not, I guess I'll see you guys back on the channel. Thanks so much for watching. Have a great rest of the week in the markets, and I will see you guys when I am back home this weekend for the top 5 options play on Sunday. Have a good week in the markets, guys. Keep crushing your trades, and always remember, don't chase the market. Let the market come to you. Take care. Peace.